Ladies and gentlemen, welcome back to the Dorian Show. I just want to thank everybody for their time today. Thank you for lending me your ears and your eyes for the handful of people watching this on YouTube. I want to start today with a story about a young, dumb man by the name of Dorian. It was 2021 when I had been holding the Facebook stock for over 2 years at that point, and I was making a pretty good gain on the growth of the stock price. I think I was up maybe $18,000, let's say. But then one day, Facebook had their earnings and the stock plummeted it maybe 40-50% within a week's time. And young Dorian, who was actually a grown man of the age of 33, panicked and sold the stock at a loss. So at the time I went from up maybe $18,000, and by the time I sold it, I was down $1,400. So I held the stock for no reason. And the reasoning at the time I gave was that Facebook, the app Facebook itself, was dying. No one uses it except for old people. Instagram was losing steam. TikTok was eating their lunch. Mark Zuckerberg was really in love with the metaverse, which was like a video game you could wear in your headset with people with no legs, you know what I mean? And I panicked. I was like, I thought at the time that Mark Zuckerberg, he had controlling shares, so it doesn't really matter. He could do whatever he wants. And I thought that he's going to double down and triple down on the metaverse, because that's what he was saying. He was like, I'm just going to keep pouring billions of dollars in this thing that's making no money. But in the time of panic, what I had forgotten was there's one thing that Mark loves, more than the metaverse, and that is money. And at that time, I couldn't see that Mark Zuckerberg has been over and over again proving to himself and to investors that he's really good at generating revenue from all his app, from Facebook to Instagram, from bringing it to mobile. Like, he's just freaking killing it. So why did I tell you this? So I sold, and I lost $1,400. And Facebook recently just had their earnings last week, and that stock jumped up 20% in one day because they were just blowing their revenues out of the water. Facebook said they were going to pay a dividend. Revenue growth was like 24.7. It was a monster quarter. And you know what? How much money I would have made if I held on to that stock, if I didn't sell 2 years ago? The value of those stocks would have been $28,000. Like, I would have made $28,000 instead of losing $1,400. So that's what I'm just trying to tell you guys, is that don't be like me, but listen to my podcast. Anyway, so why did I bring that up? It's just a good reminder that, we always tend to tell people to buy low, sell high. But a lot of times what happens is I buy low and then sell lower. Because I was buying the dip on Facebook, but at a certain point I was like, no, I'm just going to cut my losses now. I'll buy it when it's even lower. And it did get lower. I just didn't buy it back because I thought it would just keep tumbling down, tumbling. So I hope I learned my lesson. I was 33, dude. I thought I was pretty smart, but I'm clearly not very bright when it comes to investing in stocks. For anyone else listening out there, you're probably better off just investing in index funds like the S&P 500 or the Dow Jones or total market fund. But if you're a gambler like me, like buying individual stocks, it is fun, and there's always a chance of becoming super rich just from owning one stock. Like, I think if you owned Tesla 10 years ago or something like that, maybe 5 years ago, like, you would have 10 times your money. But that's the risk you have to take. Like, I didn't own Tesla. I wish I did, but I still believe in the dream because I'm poor. You know how poor I am? I'm not poor in the everyday sense, like, I have enough money to do basically whatever I want, except for quitting my job and buying a house, which is a really big deal. So I have all this money. So I'm like, either I try to save it and it'll take me forever to get a house. It might not even be possible. Or I could just gamble it and in the stock market and maybe I'll become rich and be able to quit my job one day and just do make these boring stuff full time, do comedy and write and do all that and buy a nice house. Like that would be nice, right? That's a lottery ticket. And if I lose my money in the stock market, my life doesn't really change. Like I am further away from buying a house, but I'm further. I would even if I lose everything, I'm like closer to not having any money than buying a house. If that makes sense, I don't even know if that makes sense. Anyway, that being said, I told you guys that that story because Google, uh, Alphabet, Google or whatever, had their earnings last week also, and it was not good according to the market. I thought it was pretty good. Revenue was up 13%. I mean, it's not Facebook numbers, but it's pretty good. They've been doing this for a while. Profit margin was killer, dude. Google's profit margin is like 50%, and they're making billions of dollars in a quarter. They're just flush with cash, and for some reason the market didn't like what they had to say, so they crushed them. They went down 7%, and I was like, I'm like stone cold by this point. I was like, what's the worst that can happen? It's going to go to zero? No, there's no way Google's going to go to zero. It's generating so much money. YouTube is basically better than Netflix if you think about it in terms of like a production point of view. A lot of the stuff on YouTube is free, right? Mr. Beast pays money to make his own stuff, and then he shares the revenues with YouTube, whereas Netflix had to pay people to make shows that people might not watch. So YouTube is like a free product. A lot of people spend time on it more than any other streaming service. That's going to grow. Google Ads is still good on search. I mean, people are a little afraid that that's going to fall off due to AI, but Google just has so much money that it doesn't matter. Like they are going to be a major player in the AI space. So I think they're able to pivot when that day comes, but who knows when that will come. Google Cloud is killing it. It's just a crazy company to be selling off on. But I might be wrong. Like this might not be a company in 10 years, but I think Google will be fine. So in response, this is what I did. It dropped 7%. I put a bunch of money in there. I put $20,000 into Google, additional money in there, and I'm just expecting that it's going to be at least more than 5% higher at the end of the year, because you could get Treasury bills for 5% right now, interest rate from buying bonds, which are basically risk free, and I'm pretty confident that Google will be higher than 5% at the end of the year. So I just put $20,000 in there, and hopefully I'm not wrong, guys. Imagine if I did that and next week it just plummets to all-time lows. Google just gets shut down, I'll be screwed. But no, I'm fine with it. I think if it ever goes down even more, I'll just keep buying it. Like I'm confident. Google's not one of the top FANG stocks right now, right? Because everybody's focused on Facebook and Microsoft. Apple's not doing too well. Amazon's not doing too well. But like Google's kind of like that middle child that no one's really thinking about. But yeah, they're just flushed with cash. They're like a software company. You know what I mean? Like Apple has to sell products. Amazon has a bunch of like logistics, and they hold a lot of inventory. Like I don't want to get into that. Like I'd rather be just all software, all programming. That's where you want to be in money because your margins are way higher. So that's where I'm at on that. I also decided to release this a little earlier. Earnings week is coming out for a bunch of companies that I own, including Disney. Disney is on Wednesday. And I just want to say I really hope like Disney Plus is actually making money this quarter, and ESPN Plus for those two streaming services to be profitable. I think Disney already started cracking down on password sharing, so that's good. I think more people will sign up. I think if you're password sharing, you're not gonna cancel your account, right? If your cousins can't use your account anymore, you're like, that's on them, dude. I'm not gonna cancel. And then maybe your cousin will buy it. That's what I think, at least. They have an ad tier base that's very affordable. Their bundling is very affordable. I hope those numbers improve. I hope ESPN improves also. Um, Hulu's already profitable, so I'm excited to see what they do. They did say they're gonna get rid of password sharing for Hulu, so that might be a huge boost for them. I can only hope, dude. You know what I mean? I'm looking forward to them maybe telling people more about what they have coming out this year in the theaters. We really need some heaters after some major losses the last couple of years in the silver screen. So I'm looking at other movies are at the what I think are successful, such as Deadpool, which is guaranteed $1 billion box office. I'm assuming, and the Mufasa movie, which is like a Simba prequel. I'm just I'm just hoping for the best. Like I own a bunch of Disney, and I just want them to be worth something. I don't know if they're a good company to own, to be honest, but I just have so many of it that it's probably better for me to hold on to it than to sell it at a loss at this point. I think it would hurt me more if it blows up and I don't own it than if I lost all my money in Disney. Like I'd rather have Disney go to zero than me missing out on the way up. But yeah, what else we have? Alibaba also on Wednesday. I don't know what's going on, dude. They had a great I thought they had a great quarter last quarter. And the stock barely moved, but China's in a recession right now. I think there's an opportunity to probably buy. The last couple of weeks it moved up a little bit because the Chinese government said they're going to start buying stocks. The CEO and the president said they're going to buy like together like $500 million worth of stock, which is kind of good. But at this point, I'm like, I'd rather it go down. You know what I mean? Like we need to see basically margins going up at Alibaba, which I don't know if they could do. It's been they have pretty crappy margins as for a tech company, but I think they could grow that. If profit goes up like crazy, that'll be great. I doubt it. They're in a recession. So actually, I want them to get destroyed. I want their stock to go down 10%, 20%, 30%, 40%, 50%, and I'll use that as an opportunity to buy more because honestly, it's probably one of the better companies coming out of China. And even though I feel like China's rooting the economy over there, sooner or later they would have to turn things around. And when they do, I want to be in Alibaba at dirt cheap prices. But yeah, I hope it goes down. Actually, I think it could go up. It'll probably be stagnant, but I'm hoping it'll go down by a lot. I'm hoping it goes down a lot on like OK News. That would be the perfect opportunity. A lot of people think like the markets aren't. A lot of people think the markets are efficient, meaning the it's all priced in. Like the stock should be at the price where it's at, and it's basically never at a huge discount because they feel like if there's a huge discount, the market will know about and bid it up. And I don't think that's true. I think Alibaba right now is like at a huge discount and could be possibly um, be like a 3, 4, 5 bagger. You know what I mean? It was at $300 at one point, and now it's like at low 70s. I don't know when that's gonna happen, but I think this is like it's an opportunity that not a lot of people are looking at because of the risk. They're afraid the government will continue to destroy their own industries, which they have done the last couple of years. With the lockdowns lasting too long and then just hammering at the tech sector. But I think at the end of the day, if people are living in poverty in China, the best way to do it is let these tech companies be free and be able to hire more people, make more money, and create more spending and drive the economy up. I think any country would do that. Like China is in a good position to be like a world economic powerhouse, which they already are. But You know, like all these other countries are struggling to be where they're at, and they're like, "Oh, don't screw it up." So yeah, I'm looking for Alibaba. Also, Annalie is coming out on Wednesday. Annalie is a was a mortgage trust fund. Was it? Well, they do mortgages basically, sell and buy mortgages. I'm not. I'm gonna admit it, I don't really know too much of their business. I thought I did before. With interest rates going up, it should be bad for them. Coming down, it should be good for them. But then the money and how they make money, I don't really understand. I'm not gonna pretend to know something I don't. What I do know that they're kicking me right in the nuts, dude. You know, like I've just been losing value in the stock. So the price of the stock goes down by a lot. So I'm down like, I don't know, $9,000, $10,000. However, they pay a huge dividend. So I'm getting a loss on the price of the stock, and at the time I'm getting taxed out the butthole through the dividends. So they're biting me in the butt. I've stopped reinvesting their dividends back into the stock. I'm just gonna get rid of it one day if it breaks even or even goes up a little bit. I'm not in a need for cash right now to buy other stuff. So that's where I'm at with Annalie on Wednesday. If you guys know anything about this stock or have like good insight on how when is it good to invest, or is it just a long term hold because of its dividends, comment below, dude, or message me on the gram. Do whatever you gotta do, dude. Do whatever you got to do. Thursday, big day. Big day. I said, wow, Thursday, big day. Anyway, Thursday is Cameco, one of my most exciting positions. It's not my biggest position, but it's definitely one of the industries I've been following for the last 3 years now, which is the uranium industry. You guys listen to this podcast, you guys know how much I love it. But I'm a little concerned. You know, Cameco, one of the largest producers, second largest producer in the world of uranium, they are traded in the U.S. stock market, so they are traded at a premium compared to the biggest producer, Kazatomprom, which is a Kazakhstan company, but it's only traded on the London Stock Exchange, which nobody cares. Nobody cares about London anymore, dude. This is America, baby. Anyway, like I said before, companies like Cameco they get their revenues from contracting out their uranium futures. And the reason why people are incentivized to buy today is that they put a cap on the upside. So I think at the time they were like, okay, if the market price for uranium is at $100, we'll sell it to you for like $68, which is insane. So they're leaving a lot of upside here. And what we're afraid is if the price of the spot market uranium goes up too high, Cameco would have to buy uranium at a higher price, right? If they can't meet it, right? Let's say they have to buy. They say they're going to sell company A some uranium, and they don't have enough to deliver for them, and then they have to go out to the market, buy it for $100, and sell it to them for $60. Then they're at a loss. It's going to crush their margins. So hopefully, what I'm looking for this week is that the revenues will continue to grow up. The revenues to continue to go up. I'm hoping the profit will explode, continue to go up. From a year ago, their profits have been really good. I just hope that it continues to go up. I hope their profit margin does not get squeezed too much because of the rising prices of uranium. But, you know, like I'm a little worried because Kazatomprom, the other uranium producer I told you about, they said they're going to be short 9 million pounds in 2024. That means it's going to drive up the price of the spot market. I think it hasn't really done that yet. You know what I mean? So if they're short, how likely is Cameco going to be short in their guidance, right? If they're thinking about, hey, we're going to produce, let's say 20. What if they only could produce 10? Then they have to go and buy uranium at the spot market, which is already squeezed, that could really harm their profit margins and maybe make them take a huge loss if they're forced to buy uranium, let's say $150, $200, and then selling it for like $80. That's my biggest fear. Um, but the markets are also irrational. Like when Kazatomprom last week said they're going to be 9 million pounds short, like their stock went up 10%. So I'm like, I don't understand. I gotta admit, I didn't look at their contract, but they also do contracting like Cameco. They sell futures. They sell pounds into the future at a cap. You know what I mean? So if they're hurt by not being able to produce enough, they had to go out and buy it. But like, I guess people didn't care. All people thought about was like, oh, the price of uranium is gonna explode, and it goes up. So that's what I'm hoping with Cameco. I don't know. I want there to be good news, but even if their numbers aren't that good, I'm hoping that just by the hype, it's going to push them up. I'm really looking forward for them to be like the next GameStop, which is likely not going to happen. Friday is Pepsi. What a great stock. I wish I had more shares in Pepsi. Pepsi basically owns everything, dude. Obviously, Pepsi Cola, Gatorade, if you didn't know, Frito Lay, Doritos. Dude, Pepsi basically owns like an aisle and a half of all the snacks in every supermarket you've been to. Maybe except for Trader Joe's because they suck. They don't sell real food there. Unlike Ralph's and Walmart, dude, that's where the big boys go. I think Pepsi is going to be killing it. They also always have pricing power. The thing with like snacks like Pepsi and them, even if they raise prices, like it's not that much, right? Like the most I've seen a bag of Doritos was like $5 at a supermarket. It's expensive. I wouldn't want to pay more than like $3.50, $4, but like if I really wanted it, like $5 is not going to hurt me. And I think a lot of people are gonna that shop for these products are like that. Like when you want it, you just have to get it. But yeah, those are the stocks for this week. I hope you guys enjoy. I think I'm gonna cut it a little bit short today. My neighbor's starting to play his fucking music. Boom, boom, boom. By the way, this is what $2,000 gets you in West Hollywood. A 1-bedroom apartment with thin walls and terrible neighbors. That's what it gets you. Anyway, I hope you guys have a good week. It's raining out here in LA. Stay dry. Some people are afraid California is going to flood. I don't know. I don't think that ever happens in LA. I think that happens more in like Santa Barbara and Santa Cruz area. But yeah, hope you guys are doing well. Please subscribe to the podcast, like it on YouTube, subscribe on YouTube, subscribe on Spotify, subscribe on Apple Podcasts. And I will see you guys next week. And I hope we're all going to make a lot of money. If not, I'm going to buy some more in the dip until I am poor. All right. Talk to you guys later. Peace.